Well, hello everyone. Today we're going to go through a funding readiness checklist. I think you would agree that there's a lot of small businesses that want to need money, but the question is, are they ready for funding? Not do they want it, not do they need it, but is their business at that point that it's fundable to really get approved? So we're going to go through this funding readiness checklist today, and it allows us to get small businesses pre-approved for funding in less than 5 minutes. So, how does this work? There's a few questions, very basic. We're going to go through those together over the next few minutes on a one-page application. Now, here in today's case, I've broken that application into four different subsections so we can see it and discuss each section. What do you and I know? We know that if we want business funding, that most business lenders, especially traditional business lenders, they look to see if the applicant has the three C's: credit, collateral, and capacity. So to no surprise, that's what we're going to evaluate in this process. Now, what is interesting is there are some niche lenders that only require one or two of the three C's. So it's not true to think, oh, I have to have all three C's covered. That would be ideal. That would give us access to the traditional lenders in the marketplace. But again, there are some niche lenders with just one of the three C's we can get funded. As participants go through this simple process, there's only two possible outcomes. Scenario one is we're able to issue a pre-approval for up to $5 million in business funding. So that would be ideal. But even if that doesn't happen, it's not so bad. Scenario two is we can give them a conditional pre-approval, meaning that here's what we would need to address. And upon addressing that, then we would be pre-approved. So either a pre-approval or a conditional pre-approval. Again, there's four sections. We're going to break each of those sections down one slide a piece so we can make sure we can look at it, discuss it, and understand it, but it's not very complicated at all. For anyone to go through this process, there's no upfront cost and no obligation to get pre-approved. If they want to then work with our 501c3, our grant subsidized model, then we can move forward, get them funding, and they would only pay after funding. They would pay a performance fee, which quite frankly is a 10% performance fee, and we pay half of that, 5% out to our distribution partners through our affiliate program. So this is section one, very basic. It's really the demographics. So on the top of the one page, we only ask for three pieces of information: the client's name, their phone, and their email. And there's just a little bit of instructions there to let them know what we're going to be doing. So very basic. They don't need to provide confidential information or a lot of information. So section one, demographics. Section two is what we call the first of the three C's, where we're evaluating the business credit worthiness of the applicant. And so what we can see here is that this matters because most lenders will, no one knows the future, but if a lender can look at how a business has paid its bills in the past, that can give them some confidence that businesses will pay their bills going forward. So traditional lenders certainly want to see a strong business credit profile, but there are some outliers, some niche lenders that this is not a prerequisite for. But as we're doing a match and a pre-approval, we want to see what each applicant has to match them to the right lender and for the right amount of pre-approval. In terms of completing section two, very simple. You can see that there are four columns. Column one is the name of the creditor. Second column is the trade line amount. I'll describe each of these. Third is the date that it was open, and the fourth is a report on DNB. So, for example, we just purchased a new vehicle through our business, and it's financed through Lamborghini Financial. out of Atlanta, Georgia. So we would record in name of creditor here, Lamborghini Financial. That's what we would record. That's the name of the issuer of the credit. The second is what's the amount of the trade line? How much do we owe the creditor, or how much is if it's a revolving account like a MasterCard, Visa, American Express, what's the credit limit? So the size matters, and of course, the larger the trade lines, the better. The third is the date that it was opened, and fourth, is it currently reporting on Dun and Bradstreet? So if individuals have one, two, three, four, five, six, they have room for six of their largest trade lines. If they have more than six, they can just list the six largest. If they have less than six, obviously there's room. And if they have none, it's okay. So as we see, also at the bottom, it asks, and this is an interactive form when they're actually completing it. It's not just a piece of paper. It'll have a prompt here for them to record their PAYDEX score. So the bottom line is on this portion, if they don't know the answers to all or some, they can leave them blank or put non-applicable. It's not a requirement to have this to get pre-approved. It's not a requirement of this to go through the process, but we do want to collect it if the client has it. Part of what we do with our normal client process is add trade lines. And so this is a way that we can record keep what has been added. So this is the second of the four sections. The first section was just demographics. Second section is capturing from the client information about the trade lines that they've opened that are reporting on Dun and Bradstreet. Now, how is it that we can help? If they need additional trade lines, we can add trade lines. So if they have them, great, report it. If not, if they want us to help them add more trade lines, we can certainly do so. That takes us to section three of four, collateral. Asking just a couple questions because we're wanting to assess what type of assets does the borrower have that can be committed to the lender in case of default. Now, I know as the borrower, we'd rather not have to have any collateral, but for larger loans, typically 50,000 or more, lenders typically want to see that there's some collateral in place. Traditional lenders will normally look for a dollar for dollar ratio. So if we wanted to go borrow $1 million, typically they would want to see $1 million of collateral. If we wanted to borrow 100,000, typically they'd want to see 100,000 of collateral. But again, there are some outliers, some niche lenders that do not require collateral, but normal traditional lenders will look for all three of the C's that we're discussing. We have one specific niche type of lending program that's called ABL, asset-based lending, and it's almost entirely based on collateral, much less or so on anything else. How to complete this section of the assessment form, just three simple questions. The first question is, how much collateral can the applicant, the borrower, pledge? Now, that's normally calculated by looking first at the balance sheet of the business, and then if they wish to pledge personal assets, whatever is reflected on their personal financial statement. If they don't have balance sheets, they don't have PFSs, we can help them with those documents, but that's where it normally comes from. Now, this isn't some, well, I wish I had, or I could have, or I may have. This needs to be true assets that are available to be pledged that we could substantiate if needed. So, in other words, we can't make up a number. The second of the three questions on this page is, oh, by the way, do you need us to transfer additional collateral? It's not uncommon that we work with entrepreneurs that the amount of funding that they want exceeds the amount of collateral they have, which is called a collateral shortfall. So when that happens, we can legally and ethically transfer over. I was just actually on the phone with Lorenzo just a few minutes ago, and we'll be transferring $3 million over to Lorenzo this week. So it's very common that applicants don't qualify for what they want, and our role is to fix those gaps. And then the third and final question is, if someone is wanting us to transfer additional collateral, which is not required, how much so we can prepare properly. So, how is it that we can help? Well, we're going to calculate what the client has and use that as part of the algorithm to determine what their pre-approval amount is. And then, secondly, if they have a collateral shortfall, as we just defined, we can resolve that shortfall by transferring additional collateral. So that takes us to the fourth and final section of this one-page form, and it looks at the third C. So the first C was credit, business credit. The second C was collateral, and now we're on the third C. The third C is referred to as capacity, also means cash flow. So why does this matter? Well, again, what we're trying to do is to determine, do we qualify for funding based upon what lenders want to see? So your opinion, no offense, doesn't really matter, nor does my opinion. What matters is what lenders are looking for. Traditional lenders, traditional business lenders are looking for the three C's. So this third C is looking at, is there enough money coming through to be able to pay the debt that the client wants to borrow? We commonly have people that come to us and they want to borrow large amounts, but there's no evidence that they could afford to repay it. Now, some people will say, well, loan me the money and I'll have the money to repay. Well, I guess if you were just churning cash and not investing it in your business, that would make sense. But that's not the way lenders look at it. We need to see, do we have cash flow to service the debt? Now, in terms of how can we demonstrate that we have the money to service the debt, it could be through our historical financials to say, look, we've been bringing enough in the past and we expect that to continue. Alternatively, we can put together future projections that says, well, maybe we've not been bringing enough in the past, but with this injection of capital, here's what we're going to do with it, and here's the cash flow we anticipate in the future. So it's historical versus projections. Completing this section, very simple. You can see there's two questions. The first of which is we're asking the applicant to go to their most recent bank statement. So if we're in the middle of the month, we have to go back. Well, if we're at any point during the month, we have to go back and look at the prior month because business bank statements are almost always generated on a calendar month basis. So after the end of January, February, March, April, May, a couple of days later, normally we would have access to our bank statement. And at that point, it's going to reflect what were the deposits for that month. That is what we're looking for question one. This again needs to match. So this isn't some creative exercise where we can kind of make up numbers and hope no one verifies it. This has to be factual. So question one, what were our business bank deposits last month? Now, some people have multiple businesses, so they get confused, but this would be answering the questions based upon the business that is applying for funding. If we wanted to look across multiple businesses that an entrepreneur owns, it's a bit more complicated, but when I worked at the SBA, we did this all the time. And those are called global financial statements. So then we would add up the financials from every business owned by that entrepreneur. But normally it's much simpler than that. It's just looking at the specific business that we're looking for funding for, what were the bank deposits the prior month. And then secondly, the second question is, do you need help with that? One of the innovative things that we can do is actually provide daily bank deposits, which we'll get to in a moment. So if a client back on the first C doesn't have strong credit, we can either business credit, we can either look for funding sources that's not credit dependent, or we can add trade lines to build their business credit. On the second C, in terms of collateral, we can assess their collateral and either find lenders that will loan based upon the collateral they have, or we can find lenders that are not collateral based, or we can transfer additional collateral. Here on capacity cash flow, the same. We can see what the client has and we can match to lenders that would fund that, or we can look at lenders that don't look at cash flow at all, which some don't. Or thirdly, we could increase the cash flow to strengthen the applicant's bank statements, bank rating, and financials, like their income statement, P&L. Also, part of what we commonly do is build out projections. Projections are those future looking numbers of what we think will happen in the future. So, wrapping it up, what do we do now? So, if you know someone that's looking to get pre-approved for a business loan, we've made it crazy simple. They will text to us, and this is actually our office line. They will text to us the word pre-approval. They don't need to put anything else, just text pre-approval to 903-200-8781. That's how they would initiate. Crazy simple. Then we're going to text them a link. Now, it may come from a different number, but we will text them a link to complete the one-page form. I know I've broken that one page into 4 sections just for visual and explanatory purposes, but it'll be a one-pager exactly composed of the questions we just looked at. Take 3 to 5 minutes to complete it. Once they've done that, then one of our legal team's going to reach out to them and get them a pre-approval. As I mentioned before, traditional lenders often look for applicants that have all 3 C's. So we have lender relationships that can fund for those businesses that are fully built out, but we also have access to some great niche lenders that are only concentrating on one of the 3 C's. With that being said, if the applicant wants assistance in improving their fundability, improving their credibility, we, as I've already explained, can assist them with that one of 3 ways. We can add trade lines if they want trade lines added to have a stronger business credit profile. If they need more collateral, we can transfer collateral, which was the second C. And third C is if they need help with stronger financials, we can facilitate deposits into their business bank account to have stronger capacity as well as build projections. So, with this being said, what we've covered in just a few minutes is how someone can get pre-approved for business funding by completing the funding readiness form or checklist. To get it as shown here, just simply text us the word pre-approval. You don't need to give us your name or your business name or narrative. Just text one word, pre-approval, to 903-200-8781. We'll get you the form to complete. And then if and when you complete that form, then our legal team will pick it up and follow up with you. So with that being said, be sure to join us on our daily Zooms. We'll be back tomorrow morning as well, 8 a.m., most Monday through Fridays. And hopefully this was helpful. So now you know how you can help clients and others get pre-approved for business funding and how we can leverage any of the 3 C's for funding and even help clients build their credibility, build their fundability. Thanks, and we'll see you all tomorrow. Have a good day. Bye-bye.